Hi friends. So today I'm going to talk about how to analyze a share. Before buying, we should definitely analyze the shares whichever we are buying so that we can earn well in the long term. So for that, first of all, I'll take you to this website. It's screener.in. Okay, so once we go into this website, here we need to search for the company whichever we want to analyze. So I'll enter here some company name like Reliance Industries. We'll just check if this is worth investing or not. Okay, so this is the fundamental information about the company, everything about the company, what they are doing, what is their business, what is their share price, everything will come to know. Okay, so once we click here, we'll just try to get information regarding what business they are into. Okay, it says that it is involved into textile and polyester business as well as energy materials, retail, entertainment, and digital services industry. Okay, and it was founded by Dhirubhai Ambani, and these all information you can come to know. Okay, when we scroll down, we can just click on this key points. So once we click here, we'll just try to find out from where, from which industry, which sector they are earning how much revenue. Okay, so from the refining and marketing business, they are earning 50% of their revenue, and from the retail business, they are getting 21% of their revenue. Okay, and once we scroll down, we can see that digital services business Geo, they are earning 9% of their revenue. Okay, and also from petrochemical business, they are earning 19% of their revenue. From oil and gas, they are earning 0.5% of revenue, and from media and entertainment they are earning 1% revenue. I mean, if you know, if you can see that they have 56 channels across India, and one of that is CNBC channel also. Okay, well, we can close this and we'll just try to check is this a good stock to buy or not. Okay, so here it shows the high and low price of the stock. 1830 is the yearly low, and 22,751 is the yearly high. Okay, and the current price of the stock is now at 2,539 rupees. Okay, okay, and just check this ROCE, return on capital employed, and ROE, which is ROE is at 7.97% and ROCE is at 8%. So this generally should be above 6%, something around above 6%. This I'll tell you later about this. Okay, and apart from this, debt to equity ratio means how much debt does this company have. So debt to equity ratio is very much close to zero. It is 0.36%, which is good enough. Okay, and working capital also they should have proper amount so that they can run their business when they are waiting uh, uh, for the revenue to generate. Okay, they have very good working capital amount, 55,000 crore, and this is the overall market cap of this company, 117 lakh 17,469 crore. Okay, and the promoter holding is 50.6%, means the company promoters, directors, and all these people have almost 50.6% of the shares, overall shares. Okay, and this is the pledged share percentage, which is 0.0%, which is very good. That means they have not pledged their shares anywhere to take any loans. This should, whenever it is zero, it's the best thing. Okay, now we'll scroll down and check, try to see the share price chart. This is the 1 year chart. This is just good to know information. This is the 3 years chart and 5 years chart. See, from last 5 years, this company share is growing very well. And this is the max chart from the last above from the year 2006. It is showing. In the year 2006, it was 139 rupees. Now it is at 2,539 rupees. Okay, and we will just scroll down little bit and see what are the pros and cons. Pros is company has reduced debt. This is a very good sign. And the company has delivered poor sales growth over the last 5 years. These are few things which we can just read about this. And if we scroll little bit down, we can just see what all companies are into the same kind of business: Reliance Industries, IOCL, BPCL, HPCL, all this. And we need to scroll little bit, and this is the quarterly results. Okay, better we can see the yearly results. I'll show you the yearly results. See, in the year 2010, this company has done a sales business of 2 lakh 3,174 crore. And if we click on this plus sign, it will show us how much year by year it is growing. Okay, see, the next year they did a business of 2,65,000 crore, and they have improved their business by 30%. So in the year 2010 to 12, it was growing at a speed of 34% per annum. Later on, here and there, little bit dips are there, and after that, in the year March 2019, the business was 5,68,000 crore. Later on, the next year, it has grown just 5% per annum, and after that, March 2021, little bit down. Business is bit down, but still it's fine because there are not too much fluctuations in the business. And we need to check the net profit also. See, net profit is also increasing very well. There is not much problem in the net profit. Every year it's increasing, and along with that we will see the operating profit margin also. Just see, every year out of their business they are getting 16% profit after the tax deduction. This is the tax percentage. Okay, and just a minute, we will just check if how much debt the company has. It is 0.36% debt. Okay, we will just check how much interest they are paying for that. They are paying every year 3,819 crore. This year, in the in just a minute, sorry, this is the quarterly one. We will just scroll down and check the yearly one. Okay, here they had paid an interest of 21,189 crore as the charges for the interest which they took, for the debt money which they took. Okay, apart from that, we will just check the we'll scroll little bit and check the compounded sales growth. In the last 5 years, the company has been growing at an average of 11% per annum, which is quite good. And the return on equity, this is the stock price, about the movement of stock. In the last 5 years, average it gave 10% per annum returns, which is also good. Okay, we will just scroll little bit more and we'll check how much reserves they have. Reserves, borrowings, liabilities, everything it will show. So reserves is the see, every year on year they are improving their reserves also. They are saving a good amount of money year by year. Okay, apart from that, the liabilities also, we can check the investments they are doing every year, quite a good quantity of investments. In the year September 2021, they did 4 lakh 1500 crore of investments. Every year they are doing investments also, which is a good sign, because if in future something goes wrong with the company, if some issue comes, they can take this investment money and they can put that money and improve their business. We will scroll little bit more and we will check the shareholding pattern, means how much shares the company promoter holds. See, as it's 50% of the 50.61% of the shares the company promoter only are holding, which is a good sign. That means that um, that is a good sign, because the company's money also is involved in the business, so definitely they'll try to rectify it. In the year December 2018, they had 47% of holding, and every year on year they are also increasing their holding. This is a very good sign. Okay, and FIIs are foreign institutional investors and DIS are domestic institutional investors. Domestic institutional investors means LIC, SBI, these Indian companies. and FIS are foreign companies. So if you see December 2018, they have 24% of holding in this stock, and year by year they have also increased their holding. Now it is 25.41, means from the last 4 to 5 years they didn't reduce their holding, and they have tried to bit increase their holding. And if we click on DIS, we can just see which companies are investing in Reliance. See, European Growth Fund, government of Singapore is also having an holding in Reliance, and they have 1.10% of their holding. And DIS are holding presently 13.20%, which is a good sign. Okay, and they didn't reduce it. They tried to increase it, but they didn't reduce it. We will just check what are the DIA companies from India. LIC. See, LIC has 5.98% holding as of September 2021. And if we scroll little bit, we can see Government of India. Government of India is also holding 0.18% of holding in Reliance. And this is the general public, like you and me. They are having 10.60% of holding. So however they have reduced little bit, it's fine. There is not much discrepancy. Okay, I'll show you one more thing. If we go into moneycontrol.com, and I have entered here the stock name Reliance Industries, I'll just scroll down and show you few more things. See, it says promoters have increased holding from 50.59% to 50.61% in September 2021 quarter. This is good itself. Mutual funds have decreased holding from 4.69% to 4.60% in September 2021. So there is not much decrease. It is just a minor change. That's fine. And the number of mutual fund schemes invested is from 85 to 86 in September 2021. If there are too much of fluctuations, that means that you have to research the company well. See, FIS have also consistently maintained their holding. See, from out of the many mutual funds which we have, 86 mutual funds are investing in Reliance. That's really a good sign. And that's it. This is what I wanted to tell everybody. Thank you. So always analyze stocks before investing. Just don't blindly invest. Thank you.